Hello and welcome to FX Addicts Weekly Market Analysis. This is Tim, the Currency Professor, and today is Friday, March 29th, 2013, the last day of March. So we have very little action today, and that is because the banks are closed in Europe and the U.S., and markets are also closed because of the Easter holiday weekend. So on Monday also, Europe banks will be closed, so we're kind of expecting a fairly slow day on Monday as well. Today's economic news came out of the U.S., and we had personal spending and personal income, both better than expected, up a little bit. And also the University of Michigan consumer sentiment numbers, the revised numbers came out today, much better than expectations at 78.6. So very, very good there. Looks very good longer term for the U.S., as we've been saying for a while. On Monday next week, we got a full docket next week. So Monday, it starts out with the Tankan reports out of Japan. Pretty big determinant as to what the economy in Japan looks like, and these are quarterly numbers. So this is coming out every 3 months, and it tells manufacturing and non-manufacturing. The manufacturing is expected to be lower by 7, and the non-manufacturing is expected to be higher by 8. Both of these are better numbers than the last quarter, so there'll be a lot of looking and a lot of concern as to exactly how these numbers do come out. China will be reporting their manufacturing purchasing managers index, and both of them are expected to be a little bit better than last month's. And in the U.S. also we get manufacturing PMIs also expected to be just slightly higher than last month, not much, but just slightly. Then we jump to Tuesday, and we have Europe's unemployment rate expected to top out at 12% here. Also in the U.S. factory orders, which are supposed to be positive this month, positive by 3.1% after last month's decline of 2%. And also total vehicle sales in the U.S. This has become quite a watched number because of the consumer, and seeing if the consumer is out there buying big ticket items again. Cars are one of those things. Eventually they have to replace cars, and we're getting to that point now in the economy where people actually have to go out and buy a new car. So on Wednesday, ADP Non-Farm Payrolls in the U.S. This is kind of a precursor to the Department of Labor's report on Friday. This is a private payroll company, ADP, and so they are expecting 203,000 after last month's 198,000. So they're estimating a little bit less than what the or around what the U.S. Department of Labor is expecting as well. So then Thursday, big day. It starts off in Japan. We have Bank of Japan meeting, so that will be a pretty big deal, especially with everyone watching to see what goes on there with the currency. So we're going to be very concerned and very interested in that. Also on Thursday, Bank of England meets, as well as the European Central Bank. So both of those will be watched carefully as well to see what action they take. There's a lot of pressure on the Bank of England to do something as well. So there's certainly a lot of anticipation that's going to go into Thursday. Friday, final GDP out of Europe should be down 0.6%. That's its original reporting, so really not expecting anything different there. And then also on Friday we have the Department of Labor in the U.S. Non-farm payroll and unemployment report. The non-farm payroll expected to be 201,000 after last month's 236. Now last month's 236, everyone's going to be very concerned about revisions there. So that's going to take center stage probably more than the front month. So if they revise that 236 considerably lower, then that could be a shocker for the markets. So we need to watch both those numbers. And then the unemployment rate expected to stay stable at 7.7%. That ticks up, that would be a problem. Or if it comes down, that would boost the dollar considerably. So now if non-farm payrolls jump up more than that 201,000, and they actually revise last month's up, as well as revise the unemployment rate down, then we could see a very, very large boost in the dollar. So that's the economic stuff. Let's move on to the technicals here. Euro US dollar, very quiet week in trading here. We bounced around quite a bit, and we're ending up almost where we ended almost where we started for the week. So in the 5 days, very tight ranges, but decisively lower. Still looking like we're going to go lower than where we are. Stochastics here, pretty much at the bottom, do not look like they're going to pop up. Pricing really looks like it's going to get down to this 126.50 area. At that point, we could probably have a little bit of a bounce, maybe jump back up to around 128.50. But so far, we're not seeing anything that is really flipping our skirts here, telling us that this thing's going to turn around. Now, on the weeklies, we can see how we jumped up at the beginning part of the week and really rallied up quite a bit. But here we are ending the week almost where we opened it, slightly lower. So still very much in this downward trend here, not looking like it's going to turn around. Still bothers me that we have not tested these highs, but the market being as weak as it is doesn't necessarily mean we're going to. If we look here on the monthlies, we can see how we rallied up and failed, and now we're coming back. So it really depends now on how we do for April. If we continue lower and we close April down around the 125.20 area or lower, then we're done. This is not going to rally back up, and we'll go down and seek some new lows. So longer term here, still looking fairly bearish. British pound against the US dollar had kind of a mixed week. Today we're actually down 2 pips on the day, so not a lot of action here. But we rallied up here, up into this back into this channel, and ran up to about the top of it, fell back the beginning of the week, and now we're touching up against there again. Longer term, if we look at the weeklies, well, we're still in this pretty good downtrend here. We rocketed down. Now we've had a couple of weeks where we bounce up. This week now a negative. Really, we should turn around and go down and make new lows now, technically, from this, because we've had our correction and that's it. On the monthlies, though, so the dailies and the monthlies look a little bit more positive. We do have this kind of spiking now on the dailies. I'm sorry, on the monthlies, and it's a fairly positive spike. So we could see us rally back up next month. That's a possibility. Although overall the market fundamentally is still very weak. So this could just play out where we just blow right through these lows from this month in April, and it starts the machine going again where it's nothing but selling. US dollar against the Swiss franc, consolidating still for the week. We did run up, closed at new highs here, and fell right back. So that's not exactly a great sign, but it's not bad either. We're hanging out around that 95 level. If we jump out here to the weeklies and the monthlies, we still look very positive here. We ran up above this minor trend line, and we consolidated back, and we've consolidated back almost in a straight line. So really doesn't show a whole lot of weakness there. As a matter of fact, that's kind of a strength indicator. And on the monthlies also, we're finishing up the month positive, which is good. Looks very strong. Once we get above these longer term trend lines, and again this trend line goes back about 12-13 years, we need to close up above about 98 now to signal a turnaround there. And this trend line goes all the way back to the 1970s, which is about 103 now. So if we could close on a monthly basis about 104, boy, that would be a great indication that we've turned around the longer term trend here, and we're gonna move up considerably. My guess is that we're going to do that at some point in the next 6 to 8 months, and this is the reason, this spike low. This is a very, very strong indication that we have indeed bottomed here, and this is a long-term bottom. So once we close up above that upper trend line there, it's all hands down. We're rocking and rolling. It's going much higher. So that is what we're looking for there. US dollar against the Japanese yen, very, very quiet week. We are actually up 7 pips today, but overall very, very quiet week. Everyone's waiting to see what happens here at the next meeting, and whether we get any movement here, any kind of at least talking the market to a point of moving the dollar moving higher against the yen, weakening that yen. On the weeklies, we actually look fairly good here because we ran up quite a bit and we've pulled back, in this nice little flagging type of scenario. So we're really set up here to take a leap higher. And on the monthlies, well, it still looks very good on the monthlies. We just keep pounding higher, but we have slowed down the angle, which is a good thing. We were just going up too fast. So if we can keep moving here and get up quite a bit higher next month, close up around 98, 99, boy, that'd be really great. We could then see well into the summer, June, July, August area, some really good movements. Euro Swiss down a little bit today, down about 8 pips. For the week, we're down quite a bit. We're pushing the lower limits here of our support levels, and you can see here on the stochastics how we're just pinned against the bottom. So we're extremely oversold. Really, many times this market does this, where we have this kind of triangular pattern set up, and then boom, all of a sudden we spike real high, real fast, right out of there. And we can see that happen back here a couple of times, and here. So this market is known for these kind of movements where it just jumps way out of there. Euro yen, boy, not too much action this week. Down 12, or I'm sorry, up 12 today, hanging out around that 120, 121.50 area. Really consolidating. We're overdue for a bounce, a good bounce. So we could bounce this next week or so up to about the 123, 124. And if we look on the weeklies, we can see how we should do that. This next week should be an up week, and we should rally up a little bit here just to keep this flagging pattern going. And on the monthlies, well, we're going to end the month down, but just slightly. And next month, and month of April, if we were to go down just slightly again, we're looking for it to hang out no lower than this 118 level. So if we can get down to that 118 level and then bounce back up, that would be a fairly decent positive sign for the month of April, because then we could find some new ground going higher into June and July. That is it for this week. Please stop on by FX Addicts if you haven't already and become a member. We do offer a 7-day free trial. We also have Forex Secrets, the new Forex scalping book, available, and love to talk to you, help you out with anything that I can on currency trading of any type, answer any questions for you. So please stop on by. Thank you.